Markowski joins us now for our weekly Your Money segment. Thanks for being here.
It's a pleasure. They're nervous about earnings. Earnings season started today. Numbers start coming out today. Alcoa led off, and they just came out with their numbers right before we came on here, and they lost money. That was expected to. Their revenues came in higher than expected. Their earnings a little bit lower, and they're flat in after hours. So we'll see how it all translates tomorrow.
And let's talk a little bit about 401ks. There was an article in the New York Times talking about how some people are going into their 401ks and kind of reallocating, getting out of stocks and maybe getting into stable funds like bonds. What's your reaction to that?
I think you're a little bit late to the party there, and quite honestly, this is what's gotten us into a lot of these problems, is people trying to time the markets and what they're going to do next, and quite honestly, that's an exercise in futility. I really drives me crazy, a lot of the business program you see out there where they talk about bulls and bears. Being a bull when it comes to the stock market is all dependent upon your time frame. If you've got 10, 20, 30 years to retire, you have to be a bull. If you need your money next year, well, then you're a bear no matter what. You don't know what's going to happen over the short term. No one does. The greatest investors in the world don't know what's going to happen over the short term. To try to guess where there's a market bottom or where there's a market top, it's just crazy. You have to set up your asset allocation, and you actually place capital in the place of your goals, so you reach those goals over time. People who are young, not even young, you're in your 40s, your 50s, and you're still got a while till you're going to retire, and you're in that accumulation stage of your life. You're going to look back at 2007, 2008, 2009 as your best years ever for investing, because it was your opportunity to buy things on sale.
And it always seems by the time you see it in print, if you see a trend, you missed it, right?
Well, that's the problem with the trends and the fads. I mean, I call all the pundits that they have on all these business programs are like broken clocks. They're right twice a day, and they parade. They're right today, they parade these people out. They're right, wrong tomorrow, they parade the other group out. And like I said, they turned it into a casino, and it's not about being a casino. It's about time, and it's about everything in life that has meaning, value, and worth involves work, time, and effort.
Next question: the chief executive of Goldman Sachs is calling for new standards on how Wall Street executives are compensated, and then also new regulation of large hedge funds and private equity funds. Is this going to save us from, future turmoil, or really, what kind of difference will this make?
This guy made what last year? 60 million?
I know.
Of course, he wants to now. He was, preaching to the choir.
Right.
He's now on board with this entire thing.
Sure.
Okay, we've been talking about this for a long period of time, but once again, this is part of the grand church of unintended consequences. Back in the 1990s, when people actually used to collect salaries, early 1990s, the government determined that, any salary over $1 million a year is going to be non-deductible to the corporation, which led to stock option grants and all these perks and all these other things. This is the government's doing. If people just actually got paid in cash, then it would be much more visible. Then the shareholders could see it to a much greater degree, rather than all these perks and underhanded things that they get. I think we need to obviously see this too, but this needs to come from the shareholders. When the shareholders start paying greater attention to what these executives are getting paid, the better off we're going to be. When times are booming and things are great, no one pays attention.
That's right.
Now they're taking a look.
Now they're starting to ask the questions and say, we need dramatic changes now. All right. Well, thank you so much, Chris. We always appreciate you coming in.